Hello everyone, and welcome to French Tax Online, your go-to resource for navigating the intricate world of taxes and financial matters in France. My name is Géraud, and I am a French chartered accountant. Don't forget to hit that subscribe button and ring the notification bell so you never miss out on our latest videos. Today is a special Christmas video as the jump pack, where we'll speak about the famous SCIs. SCI, three small letters for an acronym almost familiar to everyone, but whose real meaning is much less known. In this video, we will attempt to shed light on the SCI and what it implies to establish one. What is an SCI? SCI, or Société Civile Immobilière, is a form of company whose purpose is the acquisition and management of real estate in France. It must have at least two partners who can be individuals or legal entities, and its activity is considered civil. It cannot have commercial activities unless it opts for corporate taxation. We will come back to this later. The share capital is free and is divided into shares among the partners according to their contribution. What is the purpose of an SCI? An SCI is usually created for various reasons: investing in real estate together, family members or not, managing real estate assets together with the possibility of transferring SCI shares among partners, which is simpler than with joint ownership. Estate planning, including the possibility of ownership stripping, to be seen with a notary. Managing real estate assets for a professional activity while separating them from the operating company, useful in case of relocation or sale of the company. What taxes would I pay with an SCI? Before discussing taxes, it is crucial to emphasize that an SCI can be subject to income tax, yes, or corporate tax, yes, which makes a significant difference in its tax treatment. SCI is subject to income tax. An SCI subject to income tax is fiscally transparent because its profit or losses will be directly taxed as income for its partners according to their capital participation. Its activity can only be civil and not commercial. It can only lease unfurnished properties but not furnished ones, as furnished rentals are considered commercial activity. For example, for an SCI with two partners each at 50%, a profit of 10,000 euros would be taxed directly as rental income at 5,000 euros for each of the two partners. SCI is subject to corporate tax. An SCI subject to corporate tax is fiscally opaque because its profits are taxed within the company itself and the profit remains with the company. The tax treatment of its partners is not affected. It can lease both unfurnished and furnished properties, as the option for corporate tax gives it a commercial capacity. For example, for an SCI with two partners each of 50%, a profit of 10,000 euros will be taxed at the corporate tax rate of 15%, and the company will retain the net profit without any obligation to distribute it to the partners. Your attention please. The tax implications are very different between the two tax options. It is crucial to note that furnished rental automatically trigger the option for corporate tax, significantly changing the calculation of taxes both during operation and resale. Therefore, it's not recommended to engage in furnished rental with an SCI without being fully prepared for the tax consequences of corporate tax. What are the accounting and tax obligations of an SCI? Being a legal entity, a company has various mandatory legal obligations. In order, these are: establish the company and register it in order to get a SIREN number. Submit a tax return to the tax authorities every year, regardless of the SCI activity, even when the property is not rented and the SCI has no activity. And then, dissolve and liquidate the company when it no longer has a purpose. What is the impact of having an SCI on capital gain tax? This is an excellent question because the impact on capital gain can be significant and confusing for property owners when they are not aware of it. As long as the SCI is subject to income tax, the impact on the capital gain calculation remains almost negligible, and the calculation remains the same as for property acquired personally. The significant difference comes with the option for corporate tax, which completely changes the capital gains calculation. Here are the key points without delving into technical detail. The property will be depreciated over a period of 25 to 50 years, affecting the capital gain calculation. The proceeds from the sale of the property will be subject to corporate tax at rates of 15% and then 25%. Finally, the proceeds from the sale of the property will remain with the SCI. If the partners want to obtain the money personally, they must then proceed with the dividend distribution, which is also subject to taxation. Let's take a quick example to illustrate. Real estate acquired 10 years ago for 300,000 euros, then sold 10 years later for 300,000 euros. For most people, there is no capital gain, right? And yet, we must depreciate the construction part of the property over 30 years, which would be 75,000 euros in this case. Thus, accounting-wise, the capital gain is 300,000 minus 300,000 plus 75,000. The SCI would then have a taxable profit of 75,000 euros at the corporate tax rate. The partners would have to pay 14,500 euros in taxes, even though they have not actually made a capital gain. This example is simplistic, but accurately reflects the capital gains calculation with the SCI subject to corporate tax, which is significantly different from individual capital gains and must be anticipated by property owner. This video is not an absolute criticism of SCI subject to corporate tax, which can be a great tool for building wealth, but they should be carefully considered and anticipated in advance. Is it possible to sell shares of the SCI? Yes, of course, it's definitely possible to sell some shares of your SCI, whether you only want to sell a part of them or all of them instead of selling the property itself. The taxation of sale shares differs from the property sales. We will create a dedicated video on this topic later. SCI, the big picture. What should be retained from this video, which we have aimed to be both simple and comprehensive, adjectives rarely used together. An SCI is not mandatory for a joint purchase. A property can be bought jointly with an individual. Creating an SCI involves annual obligations for tax declaration that are not optional, with failures being sanctioned with fines. An SCI can normally only lease unfurnished properties. Any furnished rental triggers the option for corporate tax, radically changing the tax regime. Thus, creating an SCI with family members, friends, or investors can be a sound idea in an overall tax and estate planning strategy. However, the consequences can be significant, especially financially. Therefore, we advise all our subscribers to inquire before creating an SCI for the purchase of their French property and anticipate the consequences, especially when buying a second home that will not be or minimally rented furnished. I hope you liked this video despite the very dense content. Don't hesitate to contact us if you have any questions regarding your existing SCI, or if you have questions about setting one up or not. I wish you all a very Merry Christmas and see you soon for another video. Thank you very much.